Welcome everybody back to our next webinar out of the series Learn to Trade the Market. My name, as always, Stefan Friedrichowski, as you know, and thanks to Argo-Trading who makes that webinar series possible. So it's a pleasure for me to have you once again with me here within that webinar. Today is the 28th of February, 2 o'clock German time, so everything as usual, so to say. And back to our topics, learn to trade the market. So how do we start today? First of all, as always, you know that I mentioned my email address, friedrichowski@argosfx.com. So whenever you have the feeling that you might have some questions who need a short and quick answer, so just send me an email. It's a pleasure for me to be with you and to help you with your own trading activities. And by the way, as always, by the own trading activities, I have to mention the so-called risk warning. So whenever you do your trades, you do use the trades, of course, for your own, and you are the only one who is responsible for those trades. As you know, I have to mention that sentence always. And last remark, as always, you find all the recordings in that YouTube channel as shown here in that link, and you can have that link quite easy because I have already uploaded the slides for today. So you can download those slides out of the webinar control, go to webinar control panel. So it's quite easy. Then you have all the links, all the relevant information in a PDF document, and then it's only a mouse click to go, for example, to that YouTube channel. So topics for today, we first review our trades of last week because we have placed some orders. We have done some trading activities. Out of that trading setup, multiple EMA, and that is the one we want to recap a little bit first, and then we go on with the next trading setup. And that trading setup runs under the name Weekly Breakout. You might imagine already what kind of trades we are doing. We are looking to the weekly candles, and then we place orders as a breakout out of that given range from the week before. So therefore we have to add our nomenclature for trading setups, this new setup as well, so that we have a common nomenclature for all our trading activities, and then we can practice that trading setup as well, and that is what we will do today. So last week we introduced, or we practiced a little bit more the trading setup multiple EMA, and that is an overview for that setup. So you have within every hour selected underlyings those 4 EMAs, and we use those 4 EMAs as a trend filter, and whenever those EMA constrict, so they come together, then it's a time that we open a trade into the direction of the slowest EMA. So for example, looking to that overview right now, there might be a good time for having a trade on US dollar Japanese yen, because still we have that constriction here, and that would be an opportunity to place an order, and we might do it later if there's still some time after the introduction and practicing of the new trading setup, weekly breakout. So what you see already just with a short view on that overview, that we have a couple of underlyings like S&P 500, DAX, Brent. Those underlyings we don't have an opportunity, but we have opportunities, for example, on US dollar, Japanese yen, and there might be an additional one for British pound, US dollar. So those are the candidates right now, and that's always done just with a quick view. Our trades, yeah, we have done some trading activities and two trades. That is the trade on gold, and the other one is a trade on euro Japanese yen. Both trades have reached the stop loss. So unfortunately, those trades are minus trades, but anyhow, that belongs to trading as well. So those trades have been done, and you might remember that when we placed the order on gold, it was already on the edge to go north, so not short, but it was really on the edge, and therefore I decided to go short. Now, as always, afterwards we know what have been the better decision. So the better decision would have been long trade, but it is as it is. So therefore we have that additional minus trade. Still, the trade in euro Japanese yen on the short side was in principle a good decision. So still we see that basically the euro Japanese yen is going south, but we have reached our stop loss, and therefore we have limited our risk, and that is always the baseline for trading activities. There's a trade ongoing, or two trades are ongoing. Still, we have that Brent trade on the long side, but this one is already quite old. But we have an additional trade, and that trade is on DAX. So we have a short trade on the DAX, and if you look how that behaves, it looks quite well. So the principal idea of saying we have reached a real high and now we trade that correction is a good idea. So still that short trade is running, and of course, as always, we don't touch that trade. That means we do not change either stop loss or neither nor take profit. So trade is running well. So let's go on with that trade as it is. Okay, so those are our ongoing trades right now. And you still have seen how we can select new opportunities. I mentioned already US dollar Japanese yen, and I mentioned already British pound against US dollar. One would be a long trade, and the other one would be a short trade. Okay, but now we come to a new setup, and that setup, let me introduce that setup here briefly. That setup is called the weekly breakout. So weekly breakout, what does it mean? And I will show it to you in a couple of minutes in MT4 as well, and then I hope finally everything is quite easy to understand. So what we do here is we start on a weekly base. Weekly base means we look to the chart on an W1 base, so that is the weekly base. And what we do is we look to, for example, on Sunday, on Monday morning, or as right now we do it on Tuesday, but in principle that setup runs on Monday morning or even late on Sunday. So what we do is we look to the candle, the complete candle of the last week, and we look for the high and the low of that candle. And in principle, we trade breakout out of that range. So what does it mean? It means that W1 candle has a high, and we place a buy stop at that high of that weekly candle, and we place on that low a sell stop order on that W1 candle as well. So in principle, we would have two orders, one buy stop, so towards north, and the other one towards south, as a sell stop order for those limits. So the principal idea is that the last week is given, and whenever we have a good trend, we have a breakout into one of both directions, and that means that the idea is that that momentum goes further and that we can trade exactly that direction. But there are some additional conditions for that kind of trading setup. We use additionally an EMA as a trend filter. What does it mean? For example, if our complete W1 candle is above that EMA, then it would mean we only place the buy stop order on the upper side of that candle. So, and vice versa, of course. So what we do is we do only trading activities into, I call it a preferred direction, and that preferred direction is given by the EMA. In case that our actual EMA 200 lies in the middle of that candle, then we place both orders. So what we need additionally, as always, for any trading activity is that we have a stop loss. And that stop loss now is not taken out of the chart itself, so by highs and lows or by ATR values. No, in this case, we place our stop loss as a given percentage of that total range. What does it mean? So we have a complete range given by that W1 candle, and we take exactly 1/3 out of that candle as being the stop loss for those trades. That means that we don't, so if we have such a breakout, then that breakout should be substantial. That means it should go more or less straight into our direction. If not, then our stop loss is activated. For that kind of setup, we need an even bigger risk-reward ratio. So I go with 5 times stop loss distance. And that means that we don't need that high win rate. So we will have a couple of loser trades, of course, but in case we get exactly the trade into our direction, then we can potentially earn a bigger profit here. Later, when we go through the details in MT4 for that specific setup, you will see there are some special conditions. And for example, one is that maybe the last week W1 candle is a so-called inside candle compared to the previous W1 candle. In that case, then we take that previous candle for those ranges. I will show you examples of those inside candles. So it would mean that the last week is completely within the week before. So that is a special condition. From time to time that happens, and in that case we take the candle of the week before for those entry levels. Another rule for that kind of setup is if until the end of the week our order is not filled, so our order is not activated, then we cancel that order for the next week and replace a new one based on the actual W1 candle. And the next rule is quite simple. If we have already an ongoing trade on that specific symbol, then we don't open another trade on that symbol. So we don't want to have multiple trades for one setup for one symbol. So those rules I can recommend, and those rules have to do with risk limitation and that we don't have too much activities into a single underlying. So those are the basics of that setup. And before going to MT4, let me even go to our new nomenclature of all our trading activities, because now we have an additional setup, and that setup is called W1 breakout. And in case we have a trade with that setup, we use as a comment for our trading activities within MT4 that name breakout W1. And we get a new suffix for our stop loss setting, because we don't use an ATR, we don't use the chart itself. So in this case, the stop loss is given by a fixed number, namely 33% of the range, and therefore we use that kind of suffix for those trading activities. So I hope you got already an idea of that trading setup. And now it's time to go really into details of that setup within MT4. So let's even start with, I don't know, any recommendation. Let me just wait, and then I will use exactly your recommendation for this trading setup. Okay. There's already one comment. Really, let's start with S&P 500. So why not? So what we use is we go straight to S&P 500, and we can start here with our charting S&P 500, and you know that we have our weekly, daily, and H4 based chart. And let me first zoom a little bit, no, not in this one. Let me zoom a little bit in this one, because then I can introduce exactly, I can introduce that setup a little bit better. So what are the rules? So the rules have been that we look for the previous weekly candle. So the previous weekly candle is this green candle. And what we look for the high, and let me draw some lines for that. So we look for the high of that candle, and that high is right about here. And we look for the low of that candle, and this one is here. So, and those this is a range of the last week candle. And of course, we have a trend going upwards with so we are far above the EMA 200 as indicated here by the red line. So we only would trade the long side in this case. And now looking to the specific setup here, you can see that in principle, if we would have done that kind of analysis already on Sunday, that our order would have been triggered already. So you see that we have already prices above the red line, and that means in principle there would have been already an order and a trade already running. But now it's Tuesday, so nevertheless we can use that setup still. And let's now go in practice with that setup. So just a second, I need my pencil here to write down those numbers. And in order to have those numbers here, I simply click on that candle, and then I have the opportunity down in MT4, and unfortunately I cannot show you simultaneously with a mouse where you can find the number of highs and lows of that candle, but now it's down here in the last line of MT4, where now my mouse is rotating. So now back to that candle, and then we can have those numbers, and those numbers are high is 2368.25, and the low is 2349.90. So those are the highs and lows of last week's candle. And now it's time that we calculate our stop loss level. And let's do it together in Excel. And that means we need here something new, and I simply do it together with you. We have a low, we have a high, and we have a low, and we can put those numbers in, and the numbers are 2368.25, and the low was 2349.9. That means our range is high minus low. That is the range, and we set up the rule 33% as stop loss. So that means stop loss would be 0.33 times the range. So that is the stop loss distance for that trade. And now, since we don't for the buy, for the long side, it would be the high minus that range, and for the short order, it would be the low. Just a second. It would be the low plus that range. So now we have both numbers, and of course we don't can use all the digits here. So we have to take only two of those, but that is straightforward. So now we say, okay, we want to open, we want to place an order, and we want to place a buy stop order towards the north. So we need our Excel sheet for calculation of stop losses and so on. So it's an S&P 500 trade, and we need, of course, the exchange rate euro US dollar. And since I'm not absolutely sure, okay, it's still about 1.06, 1.06. So the entry of the trade is high, 2368.25, and the stop loss for that trade is given by the calculated number. So it's 235595, 235595. So that is the stop loss, and we said, okay, we want to have a risk-reward ratio of 5. So finally, we can find our order here. And what we need, the right contract size, and the contract size in this case is 1 for S&P 500 as well as for DAX. So now we have all the numbers for our trade. So we know we want to place an order, a buy stop order, entry, this one here, stop loss, this one, and take profit, this one. So let me write those numbers down. Stop loss 235595, and take profit is 242975. So that's quite easy, and we can now place exactly that order. So before I place the order, once again, I will repeat a little bit how we have done all the calculations. So we looked for the high of last week candle. We looked for the low of last week candle. And we have calculated that 33% value in order to have a good stop loss, or a tight stop loss in this case. And we have calculated, based on a risk-reward ratio of 5, we have calculated the take profit of the trade. So now we can place exactly that order. So we want to have a new order. And what we, of course, we need no market execution. We want to have a pending order. And our type is, we want to have a buy stop order in this case. And now we have to look to the lot size. Lot size is 4. We can only have numbers, integer numbers. So lot size is here 4. And of course, we need a comment for that trade, and that trade is break out W1 underscore fixed, because we use a fixed stop loss for that trade, and that entry level is at the high of last 3 candles, which is 2368.25. Stop loss is calculated as 2355.95, and take profit is 2429.75. So that's trade. We check the volume first, but that is pending order, so we still can take out that order later, and we can place that order. And now we have the numbers, and I see a mistake. And that's nice that that in this case I have done a mistake by my calculation. And let's have a look. What is a mistake here? You can see that the stop loss is a little bit too low. So I have done something wrong in calculating the stop loss. So let me first delete that order. So let us do that first, and it's always good to have mistakes here as well, because those belong to our trading activities as well. So what is wrong? Let's have a look here. So you see, I took the stop loss from the short side and not from the long side. So stop loss was I wrote down the wrong number, so it's 236219. So that is a right stop loss, and with that stop loss we have a different lot size. So now let's calculate the stop loss right and the lot size right. Now you see we have 8 lots for the lot size, and we have a different take profit. The take profit is a little bit more tight, so 239855. So now everything is right, and it's time to place the order right, hopefully. And so now we can place a new order, and that new order is once again now with 8, and it's still a pending order. It's a buy stop order, and comment is breakout W1 underscore fixed, and the entry price for that order is 2368.25. Stop loss is 2362.19, and take profit is 2398.55. So now I hope I have done everything right. So let's place the order. Okay. And now the order is placed, and you see now it works. The distance of our stop loss is already visually more around that 1/3 of the total candle, so the difference between high and low of the previous weekly candle. So now the order is really sitting right. So that is the first good example. And by the way, of course, you know, I have done a mistake here, but anyhow, I realized that mistake, and therefore everything is still all right. So the order is not quite far away from being triggered. So hopefully we get now a second move to the north, and then we can have that trade up and running here. Let's have a visual view on take profit, and you see that even with the take profit with a risk reward ratio of 5, this is still in reach of maybe a bigger 1 week candle. So in principle, that trade can reach the take profit already within 1 week. So that was an example on S&P 500. But let's practice a little bit more. So we go back first to the overview. And since we have done now a trade on S&P 500, and we have already an ongoing trade on the DAX, so we don't go here further. So now let's pick a different underlying in this case, and I wait for some ideas from your end. And now, okay, there's somebody looking for Euro Japanese yen. So let's go for Euro Japanese yen in this case as well. So let's take our profiles here, and the profile of choice is Euro Japanese yen. So it's this one here. So let's look how the candle looks like, and let's have a look on the EMA. So same story once again. So I zoom a little bit in. Trading direction is to the south because the EMA is above those levels here. So therefore our preferred trading direction is definitely a short trade. So what do we need? So we have to look to that previous candle. So that is already a big one here. And we need the high and low of that candle as well. So I click on that candle, and then I can get the numbers within MT4 in the bottom line of MT4. And the high of that candle is 123.07, and the low of that candle is 118.228. So those are the levels here, and you can see that nearly we have already reached once that candle. So we can still place an order, no question. So but of course, we have to calculate everything once again. So what do we need now? We have a high of that candle of 120.307. We have a low of that candle of 118.228. So the total range is a little bit more than 2. We calculate that 33% value, and we see the stop losses, the potential stop losses for a long trade and a short trade within that Excel sheet. So in this case, we want to have a short trade. So the right number for the stop loss is 118.915. And we can calculate that trade directly within our Excel sheet. So that's a good practice as well here. So contract size first is 100,000 because it's a forex trade, and we need the exchange rate Euro Japanese yen, which is about 118.3. So the entry is the low of our previous weekly candle, and that low was 118.228. And our stop loss of choice, once again, it's a 33% value of the total range, and the stop loss has been calculated to 118.914. And now we have the lot size, which is 0.08 in this case. And again, we want to trade with a risk-reward ratio of 5 in this case. So take profit for that trade is 114.793, and the lot size is 0.08. So that is everything we have to do in order to calculate that kind of trade. So therefore, of course, it's time to place the order as well. So it's quite easy here. And by the way, the trade would be in line with our previous considerations of going south because of week, because of day. And let's have a look on H4. Even that is in line with that kind of trading activity. So therefore, we have more arguments for the same kind of trade. And so it supports the principal idea to enter a short trade on Euro Japanese yen, but of course it's a trade with a pending order. So what we have is that we need a new order, and that new order is now on Euro Japanese yen, but of course the lot size is totally wrong here. Let's correct that at first. So lot size would be 0.08, and we don't want to market go market. We want to have a pending order, and that pending order is a sell stop order, and that order should be activated at a specific price level, and the price level for that order is low of the previous weekly candle, and that low was 118.228, and we have calculated the stop loss, and the stop loss was at 118.915. Take profit with a risk-reward ratio of 5 is calculated to 114.793. And of course, the trade needs a comment as well. And the comment here is, once again, break out W1 underscore fixed, because we use a stop loss calculated based on that fixed value of 33% of the total range. So everything right, that's good. And now we can place that order. And after placing that order, we do we have a look here on that trade as well. And in this case, you see, wow, stop loss is quite far away. But within maybe 3 weeks, it is reachable. And in this case, I know that swap costs are with us. So even that trade, which might take a little bit longer time, has positive swap values. So it's a good direction, and order is placed, and you can see how it works. So before placing now a new order, I want to show you something new within MT4, because what did I mention? I mentioned within my slides already that an order which is not filled should be cancelled at next weekend. Good. So the good thing is we don't have to remember those trades. What we can do is we can use MT4 or we can use, better to say, the broker, because the MT4 has not to be online for that activity. We can use an expire time for our trade. So what can we do? I do a double click here on the trade, and you see something here, expiry. And that's a very nice functionality within MT4 that we can say, okay, if until a specific time that order is not filled, then it will be automatically deleted. So what we have to do is we have to look for a specific day, and that is on Friday. Oh, sorry, that's the wrong Friday. That is already something in the past. So we need the 3rd of March. And then we can even say at a specific time. And I want to have that order being deleted, let's say at 6 o'clock. So that would be an 18 here. And if we do that, then this kind of order is automatically deleted if not filled. So that means if the price from now onwards only goes to the north direction, our order will not be filled. And that means at 6 o'clock on Friday, that kind of order is simply deleted. And for that purpose, you don't have to be online. You don't have to be logged in the MT4. Everything is already done directly at the broker. So that's a good thing. Therefore, we will do the same for our other trade, so the trade on S&P 500. So what we need is we have to modify that trade as well. So we use that expiration of that trade, once again, 3rd of March, and let me stick to the same time. So let's say 6 o'clock. The order will be deleted automatically by your broker. That is a quite nice functionality, and that is not limited to any kind of trades. You can do that for any pending order that you have that kind of expiration. So whenever you're saying, hey, I want to have a trade in the market, but if not filled until a specific time, then you can use exactly that functionality. And that you don't have to remember yourself, hey, I want to delete a specific trade. So now we have 2 trades according to that setup. So let's go for one additional one, and the other one, which has been mentioned in my previous questionnaire, was on a British pound US dollar. And let's practice that one as well. And I hope that finally you get all the information you need. So here we have the weekly of British pound against US dollar, clearly going south, no question. With respect to all time frames we have in mind. So the short trade is a direction of choice here, and let us zoom into the chart in order to see situation here. So you see we have a last week candle, and we know how to calculate the next trade. And by the way, once again here we have the situation, okay, a potential trade would be already running to the short, but today is Tuesday, so we can place the order still. But let me first show you an example of what I mentioned with an inside candle. And that inside candle is, for example, this one here. So the one with my mouse on the big red body. And you see that that kind of candle is completely within the previous one. So thinking back 2 weeks ago, in this case, we would have not used this candle. We would have used the one before still for the next week, because we have that inside candle in this case. Our now last week candle has been a little bit outside the one before, so it's not an inside candle. So we can use that candle for our next trade, no question. So let me click on that candle and let me write down the numbers for that trade. And so we have a high of 1.25688 and a low of 1.23991. So we can now calculate the range, and calculating the range we use the same Excel sheet as prepared already. So 1.25688, oops, 1.25688, and the low was 1.23991. So we have the range, we know the 33% level, and once again, the overall direction is going south. Therefore, we want to have a sell stop order, so a short trade, and that sell stop order has a stop loss of 1.24552, and we can now calculate the risk. What do we need? Okay, contract size, as always, is already set to 100,000. That's correct. But we want to trade British pound against US dollar. That means we need the exchange rate euro against US dollar, which was about 1.06. And then now we can set up our numbers. So we want to have a short rate with an entry at the low of the previous week candle, which is 1.23991, and we have calculated the stop loss to 1.24552, and we see the lot size 0.09, and we see a take profit with a risk reward ratio of 5 of 1.24552. Okay. So now it's time to place the next order. Quite easy. And that order would be a sell stop order because the overall trend direction is going south for British pound US dollar. So let's do everything here. Volume to start with is 0.09. It's not market execution, it's a pending order, and that pending order is a sell stop order because we want to trade to the south. And now we can set, or we can write in all our limits. So last week low was 1.23991. And stop loss was calculated to 1.24552, and take profit was calculated to 1.24. No, now I got something wrong. Let's recheck here. So stop loss was correct, but take profit was not correct. Take profit is 1.21186. So I wrote down the wrong number. So it's 1.21186. So that is the take profit of that trade. And the comment was the breakout W1 underscore fixed. And now we can immediately do the expiration as well. So it's once again the 3rd of March, and let's have it directly at 6 o'clock as the other one as well. So now we can place order, lot size is correct, so everything is up and running, and we can see how that works. Yeah, everything is right. So that is the distance between my entry and my stop loss is about 1/3 of the total candle. So that looks good. So take profit looks good as well, even within the chart. So it's in reach within a couple of weeks. So that is good. So now we have that order as well within our account. So we have placed 3 orders, one S&P 500, one Euro Japanese yen, and one on British pound US dollar. So let me have a look on the overview once again. And now, since we have placed already orders on Euro Japanese yen and British pound US dollar, so I don't want to place an additional order out of an additional setup, in this case a multiple EMA setup. So therefore I stay with all those trades being already placed. Still there's a question of going with an additional trade US dollar Japanese yen loss, but I think we have already enough trades up and running here, so everything should be right. One remark in general to those kind of trading activities, and I think you realize already how I do it here, is in general it's quite relaxed. What do I mean? So I first set up all those trading setups. Next step is I have really rules for all those trading ideas. If that is up and running, so if we know what we do here, then the trading itself is quite relaxed. And sometimes it's even boring. And believe me, if you reach that state that the trading itself is more or less boring, then you are in a very good situation. Because you know what you do, you know your setups, the only thing is to apply those setups, and finally, of course, we look to the results, and those results we can only have a good view on that after a couple of trades, and that means really let's say a number of about 50 trades. So we are far away from that number, so we need much more trading activities until we can review once again all our trading setups. So until we have reached that amount of trades, it's not good to say already, okay, we have lost 3 trades with that specific setup, it's time to change the setup. Of course, no. That is a mistake a lot of people are doing. That's I sometimes call it, they move from one setup, they jump from one setup to the next, and always after having a few loser trades, then already for them it's time to say goodbye to the setup. Believe me, that finally ruins your trading account quite quick. So what you need is you need a good selection of trading setups. You need the right discipline to execute exactly along those trading setups. And if you have done it right, then give it time and review your trading setups after you have reached a good amount of trades and not before. If you feel uncomfortable with your trades, then what you can do is you can reduce your risk, the risk per trade. Because one other common rule for trading is that you have to feel comfortable. That means you don't should sleep bad during night because you don't know where your trades are staying, and that you once in a while you look to your MT4 and look, hey, my trade is there and running well or running not well. No, we need the discipline of rules and applying those rules. And that is exactly what I practice here in front of you. And therefore, maybe sometimes it looks a little bit boring, but believe me, then we have a very good state of trading activities. So, okay, today a little bit earlier, ready with our trading setups, but I don't see right now a very good trading opportunity. Therefore, let's leave all our trading setups. Let's leave our account as it is with all our trades, with all our pending orders, and look to those next week. In general, as always, you can reach me via email, and it would be a pleasure for me to help you with whatever activities or whatever questions you have. In case you need specific feedback or you want to give a specific feedback, no question, just send me an email as well at friedrichowski@argusfx.com. Once again, thanks to Argus, who makes that webinar series possible. And hopefully we see each other next week, and then we will introduce the third complete trading setup. And yeah, we are nearly done with our introduction of trading, how to learn to trade the market. And yeah, I hope you enjoyed those webinars and that we see each other again next week. Thanks. Bye-bye and have a good week.